The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good afternoon from TFNN. Welcome to the February 10th. Wonderful Wednesday edition of today's Trader's Edge Show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Boy, nothing could be more evident of that than watching the Capitol Hill Yellen Congress thing. Talk about being prisoners of your past out there. Oh, look, folks, let's keep this ball rolling out here. You know, I hope you're having an extraordinary day. And if you're not, let me tell you the easiest way to do that. It's to always remember that life happens for us, not to us. That's right. When you and I learn that little 2x4 tool out there, it means that we can find the gift in every set of circumstance that life is going to toss at us. Today, you and I, we get to go look at the circumstance of these markets, what the bulls and the bears, the buyers and the sellers are communicating to you and I just past 1 o'clock in the afternoon. I want you to know that I'm absolutely grateful for your presence here, but more importantly, I am here to serve you. So feel free to pick up that phone, dial on in at any time at 877-927-6648. Of course, internationally, 727-445-1044, especially on this wonderful Wednesday. You've joined us here at the Hotel California, sponsored by Tiger Financial News Network. I'm Steve Rhodes. Welcome to the show. Right now, we got the Dow trading up 67 points at 16,088. S&P is up 22 points. She's trading at 1874. NASDAQ Composite up 84 at 4352. Russell 2000, she's up 16 points. She's trading at 980. Gold's back $5 right now, trading 1193. Silver down 20 cents. That's trading out at 1524. Lightspeed crude basically flat, but down 10 cents, 11 cents, 12 cents. 27.83 is the number that it's trading at right now. To the upside, you've got Priceline leading the charge up $50. I don't know if they were out with numbers here. I haven't looked at any of these individual stocks, but we will almost forming an island bottom, but it did not do that here this morning. You've got Intuitive Surgical. That's up $19. About 3.5%, 3.8% to be exact. Google's up $17. Amazon is up 15. Panera Bread is up 12. Chipotle's up 11. To the downside, USANA Health, a very unhealthy looking stock, down with some pretty big volume. We had 394,000 shares as we speak right now, but I believe that might be coming into a breakout area. We'll go take a look at that. You've got Solar City down 25%. That is to the downside off $6.57 out there. And so let's go ahead and get this show kicked off here. Let's go figure out what these markets are doing. And we're going to start off by taking a look at the NQ. Because the NASDAQ 100 has really led the markets to the downside. Let's first check in on the NASDAQ composite, see where we're at as we take a look at our advanced decline oscillator. So close to that zero line. Of the three oscillators that we take a look at, advanced decline oscillators, New York Stock Exchange, as we speak right now, 10 after 1, in the hands of the bulls. Why do I say that? Because the oscillator is above the zero level. Same thing for the Dow. The Dow was fairly well above that zero line out here, and, you know, it's well off the session highs out here. So we've got the Dow, we've got the New York Stock Exchange at 10 past 1 in the hands of the bulls. The NASDAQ composite is not participating, not just yet. Now that zero line may be the line of demarcation. You may see things turn down from here, but if it closes above zero, well, we'd have synergy across the board with regard to the bottoming pattern that you and I have identified inside of the market. So now let's go take a look at the NQ. And we had a nice move higher into about, the 10:30, 11 o'clock time frame today before things began to sell off. And I'll show you exactly what they were doing. It's just the same patterns that you and I trade on a consistent basis out here. So let's take a look at the first. This is the daily chart for the NASDAQ. Here's what we know. We know that the high came in out here on the trading day of December the 2nd. December the 2nd, we had an A to B equals CD pattern that had completed. Let me do this here. Give me a moment. Let me go ahead and get that on this chart. So give me a moment to do that. Let me just go add that tool over here. And by the way, I'm going to be sharing all of these tools, all the little secrets, little morsels out there that you absolutely want to be aware of if you trade any of these patterns. I'm going to be doing that tomorrow evening from 6:30 to 7:30 when I do my workshop, the Ultimate Toolbox. It's going to be I will be providing you with just really important morsels of information, and you can get it basically. You can get it basically for free. I mean, it takes you a few minutes to sign up for the course, but that's it. That's it. So join me even if you can't be there. What you'll want to do is go ahead and sign up anyways. The workshop is archived. That way you can really watch it over the weekend. You can get all of that great information. So looking forward to tomorrow evening for sure. Now, let's come back here, take a look at the NASDAQ. That was just a strategic pause for being able to go ahead and get these. Oh, I didn't even do it. Son of a gun. How the heck did I do that out there? That was a strategic pause where apparently it's like, you go to the refrigerator and you forget why you went to the refrigerator. Well, Stevie just had one of those moments. But, it must have been because it was happening for me, not to me. Okay, we have that resolved. Now let's go take a look at the A to B equals CD patterns out here. The A point in this case was down here at the lows from August 24th. Your B point out here was the September 17th high. Nice little retracement, about a 0.786, just slightly shy of it back on to September 29th. So we know we completed a 1 to 1.272. A to B equals CD to the upside. At the same time that we had that pattern completing, we had what? We had a nice little price relative strength divergent pattern. We had a seventh wave move, that seventh inning stretch to the upside. I mean, you had it all. So the question that I pose to you, if those patterns were good enough to actually identify the top, can you explain to me why they wouldn't be good enough to find a bottom? Actually, you can't, because it is what it is. So what do we take a look at here? Let's take a look at the A to B equals CD down inside the NQ out here. What the market actually did, talk about stretching. It made a 1 to pi, 1 to 3.14 A to B equals CD to the downside. Not to the exact tick. That number would have been 38.68. So that's one pattern that we had. Let's go ahead and erase that. Second pattern that we had, it made 7 waves to the downside. Nice little seventh inning stretch. That was confirmed yesterday when we didn't see a lower low from the trading day of February the 8th. What else do we have out there? We had price. We have price moving lower with what? Without the gusto. Without the gusto. Now, we also know there's a fourth pattern out here, and that is where we have a key swing point that had big volume. August 24th out there. And so you've got a test of a swing point on lighter volume, pattern number 4. You've got a 100% move of a move, pattern number 5 out here. It says bounce or bottom no matter what. Well, no matter what, until you take out that swing point low from 2 trading sessions ago. And as we speak right now, you've got that wonderful three-river morning star bullish reversal signal that is forming. So we've got the patterns out here. They suggest that at this stage, again, this is 114. It's really important to take a look at these patterns, see where price is at as of the close of today's contract session at 5:15. But what I can do is report on what we're looking at right now as of 114. So what do we know? We know the same pattern that was present at the most recent high in the NQ is the same pattern that has now formed the bottom. It says we're going to get some type of bounce or bottom, some type of retracement. Is it going to be 0.382, 0.618, 0.786? I don't know. But we will continue to watch it each and every day here at TFNN. Steve Rhodes with TFNN. We'll be right back. Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Dow's up 42, S&P is up 18 points. So when we took a look at the daily charts for the NASDAQ, we looked at the composite, slightly looked at the New York Stock Exchange and the Dow. Now, here's what we're looking for next. Here comes the next clue inside of the markets out here. We're going to take a look at the 30-minute chart. So we saw a nice push higher in the futures market. This was actually in the cash market because this was occurring as the market was moving into the 10:30 time frame. Now, if we come back here to the most recent bottom inside the NQ, you're going to get back to about 3 o'clock in the afternoon. That was on February 8th, so just a couple of days ago. Now take a look at these patterns, right? We just took a look at the patterns that form the top inside of the NASDAQ. We just took a look at the patterns that are present on a daily chart, and inside the NQ, I should say, inside the daily chart at the bottom right now inside the NQ. That was on a daily basis. Now we're just simply in a 30-minute pattern out here. You don't think that these patterns repeat on multiple, all the time? They do, and they repeat on different time frames out here, and they act the same way. So here's what we're looking at, and I really believe that it is all about the NQ. Dow has been very strong, so we want to continue to take a look at that. But when we take a look at the week indice out here, what we can notice is the following. First there, if we take off from that low out here from a couple days ago, 3 o'clock in the afternoon, we start counting our waves to the upside. Guess what type of wave we were in as we approach that 11 o'clock hour? Yeah, you guessed it, wave number 7. Take a look at it, nice little seventh inning stretch. It just makes you want to just stand up and, and stretch and put your shoulders back and the whole bit. Now, take a look at what else was forming. Price was moving higher, doing it with what? Less relative strength. Just like back here at the bottom at 3 o'clock in the afternoon, price was moving lower with what? Less relative weakness out there. Now, you had a big old bearish reversal signal. You had an A to B equals CD to the upside as well. We can draw a couple of those in here. Here would be one, if we start from that low out here from a couple days ago up to this nice little shooting star, then a retracement down here. You can see you made the A to B equals CD pattern, so it completed one of those as well. Then you had a nice big old bearish reversal signal, a key reversal session on that 30-minute chart, a bearish engulfing, bear sash candle, the whole 9 yards. But what's interesting here, Remember, the body of the candle is truly the essence of price here. And on this chart, we also have our horizontal lines of support and or resistance. In this case here, support Rooney. That is the 30-minute set of TAS market profiles. And as we take a look at the move to the downside here, the body of the candle has not closed below the low of that profile. So levels of support, yeah, intra-session, we've seen some punches down. But that level, so to be watching to the downside, if this pattern here is going to completely fail, would be any close on a 30-minute basis, not a move during the 30 minutes, but an actual close on a 30-minute basis below 39.8950. I mean, it doesn't get any easier than this in order to be able to understand whether the market is in fact forming a bottom, or whether it's going to whether it's conformed it, or whether it's forming it, and prices are going to try to move back down there and maybe scare us a bit again. On the other hand, if, in fact, we see a close above that high that came in at the 11 o'clock time frame, I'll give you what that number is. You want to write this down on a pad of paper or somewhere, maybe just on your hand. Write down the number 4041. If we see price get above 4041, this whole set, and now number one, that's a level of resistance from a number of different reasons. Number one, because you got a key reversal. You got a bear's reversal signal as well, bear sash candle out there. So you got it. So any move above that, old resistance ought to become what? New support. And we've got more. You would be recycling that seventh wave move. That typically tells you that you've got a strong wave count that is underway inside of the market. So we know what to be paying attention to. I don't know whether it happens today, as the Congress continues. I don't know if they are continuing, if they've just taken a recess to go get lunch, what they're doing, or if the grilling is over and they're going to get back and try to put her inside a smoker again tomorrow. But, the market has formed and or is forming a bottom out here, whether you like it or not. That's what the patterns are. And so we know what to be paying attention to. Right, and we really don't. You and I don't have to look at anything else. I believe that the signal, the full signal as to what the markets are doing, are going to come right from those two charts, the daily and the 30-minute chart out here. But let's not stop there. Why should we stop there? I don't know. Let's just go take a look and see what the 120-minute time frame chart has been communicating to you and I. Oh, voila. It also had a nice little seventh wave move to the downside. This was a key reversal at the bottom. This was yesterday at 4 o'clock. Was it yesterday? Let me make sure it was yesterday. It was 2 days ago, February 8th. Of course, I should have remembered that from the 30-minute chart. So on the 120-minute, 2-hour time frame, completed A to B equals CD pattern, completed with that nice seventh inning stretch to the downside out here. We've got market profiles, a new one that formed in the 12 noon time frame that is above the prior one. So the 2-hour chart is saying wagons ho to the upside. So that's the message from a 2-hour chart. Hey, it would not be right to not go look at one more time frame out here. So let's go take a look at that 5-hour chart, that 5-hour energy drink chart, and see what we have here. Right now, we can see that price is trading above its market profile, that horizontal level of resistance, 39.95. So that's looking pretty good, too. So the question becomes, inside of the NQ, where is price headed to? All right. So we've established that there is a bottom pattern out here that is worth not ignoring. So let's go take a look at where price is likely to head to. Let's go take a look. I'm just looking at where did I put that on here? Right here. Okay. So now let's stay with the NASDAQ out here just to get a feel. So here's what we know. Oh, another pattern. How about that? So when we take a look at the daily profiles, you have a new daily profile that formed today. The top of that box is 42.66 and change. So we'll call it 42.67. So another number to write on your pad of paper, right? We had one for the 30-minute chart. Now we're going to take a look at one here for the daily time frame. It's going to be to the upside. It's going to be 42.67. You get above 42.67, and what this says to us is that price inside the NASDAQ ought to make its way up to 42.66. Why do you say 42.66, Devo? Well, very simple. You've got a brand new box that formed. Price is right now trading at that point of control where buyers and sellers are most comfortable, that so-called fair auction level, where buyers and sellers are most comfortable. If you get above that level and you get above the next level out here, resistance, which would be the weekly bottom of that box, which is at 405. So did I give you 42.66? Yeah. Actually, let me take this back here. So let's restate this. Okay, we are trading inside a brand new daily box out here. And if you get back above the weekly bottom, 4057, is that the number I gave you? If not, make sure you write that one down on a pad of paper. You get above that, there's no reason for price not to continue up to the 4266, 4279 level. That becomes a target if we take a look at the horizontal levels of support and resistance. Now let's go take a look at our Fibonacci friend. Let's go take a look at Leonardo out here. And because, just like Leonardo DiCaprio was trying to get the Academy Award, right, for fighting a bear, so too is this market, because this market is trying to fight the bear, is it not? And we're going to find out if it's going to get that golden award, or is it going to get the golden goose out here? Hey, it would get that golden goose if it takes out the low from 2 days ago at 38.83. Otherwise, from a retracement level, it says 42.08 in store, as is 44.09. We'll just call it Stevie DiCaprio out here. Either going to get decapitated with a move down below that low, or going to accept the Golden Globe, going to accept the Academy Award for beating the bear. Steve Rhodes with TFNN. We'll be right back.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dow's up 22, S&P is up 15, and really pretty amazing that the market is even up. is even up this much. Why do I say that? If we take a look at perhaps the biggest mover inside the markets today, it's in the currency world here. We're taking a look at your friend and mine, the Euro Japanese yen. You want to talk about being crushed and moving to the downside out here? And this is the headwind for the market. So just the mere fact that they're up is really very impressive. But on the other hand, we have to recognize and realize this is really a directional type correlation between this currency pair and the U.S. stock markets, and it's not so much a where you can measure one pip equals X number of ticks or points inside the U.S. stock market out here. But nonetheless, that is the true headwind that is out there. I say the stuff going on with Yellen, Schmellen in the Congress and so forth, that's one thing. But the real, where the metal meets or the rubber meets the road out here, it really is in this currency pair. So pretty good chance that just a stable, just a slightly positive market would be fairly impressive today when we take a look at that currency pair. If the markets really finish up much stronger in light of that movement inside that currency pair, very, very impressive out here. Let's take a look at some of these individual equities, see what the heck they're doing. USANA Health, USNA, out with their numbers before the bell, I believe. And let's go ahead and try to get our volume bar out here. Okay, so let's go see what this is doing. Some big volume to the downside. Clearly, they disappointed, whatever they released out here. But let's go see where this is trading back into. So big volume for this, just put things in perspective. 500,000 shares is a fairly big volume inside of USANA. However, a huge volume for this, and I said huge, was on the trading day of October 29th at 1.1 million shares to the upside. That's your breakaway. That is your breakout. And if we take a look where prices come back to, it's basically coming back to that breakout right around the 88.44 level. It's been as low as $92 even Steven. Hey, it's got a Basil Chapman round number high out there. Or actually round number low. What am I talking about? But if we take a look at the B point here of an A to B equals CD, that's being taken out. I will assume, maybe not a good assumption, but I will assume that it's going to do more than 588,000 shares by the end of the day, but maybe not. If it does do that, that says, hey, you might have an A to B equals C, a confirmed A to B equals CD to the downside. If that's the case, that will give us a price projection. Well, I believe it will. There we go, our A point, our B point, that November 4th level that we'd be looking at, and your C point out here on November 27th. That would say that price would move all the way back down into a previous level where things broke out in USANA Health, and that would take it into about the 67 to 64 area for USANA Health. So the first area to be watching is probably the 88-ish range, and if it closes below that, you're looking at probably another $20, $25 move to the downside. Ticker symbol there, USNA. If we look at, let's go look at this one here. 26%. No, let's go. Where was it? Which one was it? Solar City. SCTY. You got to be careful how but Solar City down 25% out here. Let's try to figure this out. See, now big volume inside of this. This is down with 25 million shares. Let's try to figure out where this is coming back to, if anything. We're going to have to put this on a weekly time frame chart just to try to get some type of, this does not look good. No, this does not look good at all. So let's pull this out here. Let's stretch this out. Let's stretch it. Let's get rid of that pattern that was on there. Delete that. Okay. So here's what we know about taking a look at the chart for Solar City. I'm not sure if this is the case, but I think that it likely is. Solar City went public back in December 2012. The low was 920. The high of that week was $13 out here. $13. You're trading the low. The low so far today has been $18.26. The official breakout inside of Solar City, you'd say, went ahead and took place the week of May 16, 2013. We put a line across that. Here's what we can say. And the volume back on that breakout was about 25 million shares. You've already done 36 million shares, and we've got a day and a few hours left in the, no, we've got 2 days and a few hours left in the trading week out here. So this says that Solar City's headed back to its IPO area, at least. The top again of which is $13 out here, the low of which is $9.20. There's on a weekly basis. There's no reason why I can't do something more than that. So that is on Solar City. Hope none of you are holding shares of Solar City, or hope that nobody is trying to buy the bottom of Solar City out there. Let's take a look at, we also got some other large percentage movers out here. You've got Capstone, paper, and packaging. How bad could business be? Well, apparently it's pretty bad. Let's move this off of the weekly chart. The weekly chart, by the way, shows 6.4 million shares. This, too, is below a breakout area, which would have occurred back in May of 2013. Let me just see on a weekly chart, can we figure out where this thing is headed to? And the answer is... wow. This thing is probably headed back to the 630-ish area, maybe 730 or $10 right now. I'd probably go with that 6-ish type of level out here at a minimum. If it doesn't stop there, then it probably runs all the way down into the $2 range. $2 chuck out there, and that is for Capstone, paper, and packaging. I don't know what they do. I'm not going to spend time trying to go over and figure that out, but what the heck is going on in the paper and packaging industry out here? Not good. Let's take a look at let's look at to the downside here. Assurant Inc. AIZ, not AIG, down with 2 million shares. They were out with numbers. Oh man, this looks pretty horrible. Can you say pretty horrible and have it make any sense out there? Probably not. So you've got volume of 3.9 million shares. It's dangerous because your next high volume bar on a weekly basis way back in November 2010, around the $41 level. You are at $65 right now. But let's first go take a look at the daily chart, see if there's any pieces of a dream out here. And we see no real breakouts to report on. So this looks like it's probably headed back into the levels, around $63. And you're trading at $65.75. Actually, right down around $59 is what I meant to say. You're so probably about 59. You're trading at 65 right now. That is ticker symbol AIZ, as in zebra, or zebra, as we say here in the United States. Let's take a look at a couple of things that are moving to the upside. You've got Priceline is leading the charge dollar-wise. That is up $48 with 500,000 shares out here. Just shy of it. What do we know about Priceline? Priceline was testing a swing point. Let's go see if it was doing it with or without volume out here. The volume on that swing point was about 1 million shares. Volume against 760. So 1 million shares is what it was testing, or what the volume was at the 990 level. And that was tested back with 1.1 million shares. So roughly the same number of shares. Then yesterday, 1 million shares. So you've got the old snap and crack out here where price has moved down below a swing point. It is back up above it. So that says, where is price headed to? Let's go see if we can turn on our market profiles and get a feel. You've got a new daily bottom of the box. So it looks like Priceline headed to 1052.56 and then maybe up to the 1080 level. And if it can get above 1080, it should have free sailing to, believe it or not, $1,243. Steve Rhodes with TFNN. We'll be right back.
Are China A shares hot or not? If you trade China A shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A Share Bull and Bear ETFs. China A shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. TFNN TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now, you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. Dow's up 32, S&P 17. Let's go out to Boston to our man, Tom. Tom, thanks for calling. How are you doing this afternoon?
I'm doing pretty well, Steve. How about yourself?
Excellent. Thanks so much for asking. And you're trading the Direction Daily S&P Biotech Bull or your LABU? Are you looking to get in, or tell me what you're doing, how I can help you?
Well, I jumped in yesterday at 509, and I don't like to stay in too long, but I'm wondering what you think about a little bit of a run here.
Well, let's take a look at it. Let's see if we can get some feel from a horizontal level of support and resistance. And since you're not really in it for the long haul, the first target area that I would give you to be watching for would be 689. If it got up to 689, would you be a happy camper, or would you have already been out before that?
Oh, I'd be very happy at 689.
All right, so that's 689. That happens to be our daily box out here when we take a look at our market profile. So we're just looking for some little horizontal levels that you can rely upon. Let's go down to some shorter-term time frames and see what I'd like to see is some level of support pop out for you, and it would be really on the 240-minute basis. So you mentioned, let me try to blow this up. You're in yesterday. What was the price point?
Oh, 509.
509. So here are some levels to be watching today, and I'm just looking at a 4-hour chart. The first thing that you would like to see is a close above 587. We're trading right now at 587. How about that? So it's really sitting up on a line of resistance. So if it can close above that level, that would be bullish, and that would give you the signal that, the daily level that I gave to you may, in fact, come to fruition. If instead it can't get over this level of resistance and it starts to pull back, probably the next area for you to be watching would be 523. Would you be staying in this equity down to 523 from where you're at right now, or?
Yeah, I could be. Yeah, I could do that.
Okay, I'm not saying that you should, but that would be the next logical level. If it can't bust through resistance, right? If you can't, like Tom has taught us, if you can't bust them up, you try to bust them down. If it can't close above this 587 level, busting them down in this case here would take you down to 491, which I know you wouldn't let take place, to the 5. Yeah, to the 523 level. So and now I'll go down to one more shorter term time frame for you. So now that was a 4-hour chart. Let's go take a look at the 60-minute chart out here, 60-minute time frame, and see what this says. Now, in the 60-minute time frame, I really like it. Are you watching this on Tiger TV?
No, unfortunately, I can't.
Yeah, okay, no problem. I'll describe to you what it is that I like, and I'll actually visually show that to the folks that are playing the home game. So I'm going to turn off the actual pricing levels. And now, Tom, the only thing that's showing up on my screen are our TAS market profiles. And what we like about this 60-minute chart is that a new profile formed about, maybe an hour ago or so. And where that formed was a higher level than that previous box. And that's the first indication that, of potential bullishness. Now, I'm going to go ahead and put the pricing back up here. It, too, on the 60-minute time frame is up against resistance. 587, I think, was the number on the 2-hour and 240-minute chart, the 4-hour chart. It's 585 on this 60-minute chart. But here, support is down at 547. So I would say as long as this doesn't close below 547, maybe this is just a sideways move and you've got that chance to move higher. But the question is, you were in it yesterday, so, would you stay in it then overnight again?
I would, yeah, as long as it's not over the weekend. I don't like staying in over the weekend, but.
Okay. I would say for your end of day number to be watching here, just make it easy for you, 547. If it closes below 547, might be worth just taking the profits and, take a look at it again tomorrow.
Okay. Well, that's great advice. Thank you, Steve.
Hey, my pleasure. And thanks for calling, and best of luck with the trade. That was Tom. The trade there is LABU. That's the Direction Share S&P Biotech bull out there. Always good to take a look at some of the equities that are inside that. Now, I don't know for sure if this tracks the IBB specifically, but I believe the number one weighting inside the IBB is Celgene, CELG. So let's just go take a look at that. In fact, I believe the top 10 equities inside of the IBB represent like 60 some odd percent of the actual ETF. Now, in the case of the IBB, let me go ahead and put our daily boxes out here. Everything looks good on the shorter term time frames, but let's put our daily time frames out here, and everything looks good on the daily time frames. Tom is one smart cookie. So the number one weighting inside of, I think that is part of the LABU. Somebody want to go back and double check me out there, but that certainly is the number one weighting inside the IBB. So if it is the same thing, it's nice here that you've got the leader of the pack is really up above resistance. And that says that Celgene ought to be able to make a move up to the 112 area. I think Amgen, AMGN, is the second weighting inside the IBB. So let's see what shows up here, get a feel for some horizontal levels of support or resistance. Brand new box today. This says to us that Amgen ought to run to 149.65, maybe even 152 out there. So that's looking pretty good. I think number third weighting is Biogen. What is that? B-I-double-I-B-B? B-double-I-B? Is that right? B-double-I-B? Is that Biogen? Yeah, it is. So in the case of Biogen, let's see what this is doing. So Biogen doesn't look as healthy as the first two weighting, Celgene and Amgen. So what Biogen needs to do for this trade to really work out well for Tom is to get above 258.06, and you're at 256.48. So it needs a couple of bucks out there, and then if it can get above that, it's got resistance at 261. So those are the hurdles that Biogen. Let's just finish this off with number 4 weighting, at least inside the IBB, and that would be Gilead, G-I-L-D. Let's go see what Gilead is doing today. So in the case of Gilead, good sign here is that it went ahead and it closed its gap. This is looking really pretty good. So Gilead looks good. Gilead actually looks like it could run to the 99.50 level. But let's turn the profiles off. Here's what I want to show you. There's nothing more friendly than a gap, right? So let's go ahead and reframe gaps out here, because gaps are absolutely your friend. They are not your foe. They provide us with tons of information out here. Number one, they're breakout areas or breakdown areas. And when you get above a breakdown area, which in fact fact is the case in Gilead Sciences. The breakdown area, where it gapped down from $86.86, we see that window was repaired yesterday with a close above that level. And today, it's extended its way higher out here. So what's the next target area for Gilead? Looks like 93.54 if we just simply use swing points out here. Back to the boxes, and the boxes say, hey, you get above 93.54 and 99.50 would be on the way. So hopefully that assists Tom with his trade in LABU. Let's take a look at a couple other things here that are, let's go take a look at the ETF structures when we get back. Stevie says it's all about the NQ. It's all about the NDX 100. So that would make sense. Why don't we go take a look at the QQQ series ETF? It's trading at $97.96. It's up $1.60 with 37 million shares as of 1:50 p.m. This is Steve Rhodes with TFNN. We'll be right back.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
It's 2016, and TFNN has a brand new programming lineup to kick things off. Starting January 4th, Swim Lessons by Thinkorswim and TD Ameritrade will be airing 5 days a week at noon Eastern Time. Join hosts Scott Connor, Kevin Hinks, and Cindy Faber as they host their daily options program live at noon 5 days a week with no commercials for the entire hour. Nico DeHaan and Paige Clark will be moving their program, Living a Primal Lifestyle, to twice a week, Tuesdays and Thursdays from 7 a.m. until 8 a.m. Eastern Time. Wake up with Nico and Paige and start your day off right. The Bull Bear Binary Option Hour by Nadex will now be live Mondays and Fridays at 10 a.m. Start and end the week with the 3 hosts, Tom O'Brien, Tommy O'Brien, and Daryl Martin, as they break down the world of trading binary options and spreads. For all the details on the new 2016 programming lineup, visit the front page of TFNN.com. TFNN, educating investors.
Join David Dwight as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
Welcome back, folks. Email came in during that break there, so let's go ahead and get to that. The question is, Nugget, is there a low you see? Well, let's take a look at gold first. We know that the nugget, which is a beautiful equity out there, we know that it's going to directionally correlate to what's going on inside the gold market. So we're first starting to take a look at gold out here. Still holding up. Now we have a brand new market profile, daily profile that showed up. That was formed today. That says that your level of 1201.40 is your resistance zone. If gold closes above that, John, then that says that the nugget ought to be moving higher. If gold is unable to close above that and instead goes down to test a support level, you're looking at a range between 1157 and 1167. So you got a $10 range there. If gold can move down there and hold and not close below 1157, now that's the number for today. Tomorrow's number will change a bit. But if it can not close below 1157, then that might be the bottom that you're looking for in nugget. So forget about the price. Pay attention to what the price of gold is doing would be my first response. So we'll take a look at nugget out here. If, on the other hand, we see gold get down below 1157, then take your hands out of your pockets with regard to nugget. If you're still in nugget and you have a long trade out there, my recommendation is to take your profits, because that would suggest to me that gold would be going much lower than people might anticipate. But it's got to do that in order for that to happen. At this stage here, we don't have a shred of evidence to suggest that that is going to happen. But if it hits those numbers and it gets below there, we have all the evidence in the world to go ahead and rule on that. Now, if we take a look at nugget, NUGT out here, let's go take a look at it, see what it is doing. Now, nugget out here went ahead and made a 100% move of a move by getting all the way back to the October 15th swing point. What did it do 2 days ago? Created a nice little shooting star candle. What's a shooting star? It's the opposite of the hammer. The hammer hammers out bottoms. The shooting star shoots out stars. I don't know. It can't hammer out the top, but it is a topping signal. Now, there was a gap up when that candle was formed, the gap up from the February 5th to the February 8th time frame. So we have to account for that gap, right? Well, we just took a look at gaps as holding as support or resistance. Well, guess what the message was inside Nugget, right? When we were taking a look at one of the equities out here, Nugget blew it. What Nugget needed to do to say that that shooting star was not a top out here was to not close below 43.37. Well, it blew that yesterday by closing at, what's the price here? 40.63. So we don't have to read the tea leaves. The market just gives us this information freely and willingly. It's just a matter of us actually responding to it. So what does that say? It says today's candle isn't anything out here. It's certainly not a bullish reversal. It says we're probably looking at about the 31.23-ish type level to potentially act as support. If not there, maybe it's at 28.70. But what I can guarantee you is that Nugget will follow along with gold out here. So if gold's able to break above the top, then this bottom that we saw here today would be in. And if gold moves to continues to move lower, so too shall Nugget out here. But as we read this, it says that it wants to pull back, and I'm thinking the first place is probably about 31.23 out there. Okay, let's go take a look at what the Qs are doing. The QQQ series ETF right now trading out at 97.85. It too has a brand new daily box out here that says pièce de résistance inside the Qs. If the Qs, what they need to do in order to get bullish out here, in order to go ahead and collect that Leonardo DiCaprio award by being able to beat the bear, what the Qs have to do is close above 99.05. That is the number to be paying attention to. The low of 2 days ago says Leo DiCaprio lost to the bear, and the market continues lower. Folks, stay tuned. Our man David White is up next. It is, wonderful Wednesday. We got the Tom O'Brien Show from 3 to 5. And don't forget, get over to the homepage at TFNN.com. Join me tomorrow night for a great party where I teach you some extraordinary tools and share with you morsels of information that you really need to know. Take care, folks. Have a great afternoon.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active effective trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
You're watching Tiger TV.